Hi, I am D K Sinha and you are watching DK Global Market Insights, your weekly outlook on the US stock markets every Saturday at 7:30 p.m. Eastern Time. Important disclaimer, stock market returns are never guaranteed. Deep research can give us an edge in the market, but risk management is non-negotiable. This video is for education only, no buy sell recommendations. In this weekly update, we help you understand what's really happening in global markets and how to read the price action like a professional. This week, US markets rallied strongly. Global indices turned green and Asia led the recovery. We will also see which market topped the week and what the charts are telling us next. Let's begin. US market this week. US indices ended the week higher. S&P 500 was up by 1.92%. Nasdaq 100 was up by 2.18%. Dow Jones up 2.2% and Russell 2000 up 2.18%. That's a broad-based rally across large caps and small caps, mainly supported by easing inflation concerns and sharp fall in volatility. When volatility cools down, confidence usually returns to the equities, and that's what we saw this week. Let us now check how other global markets performed. Global markets. Outside the US, it was a strong week for Asia and Europe. Japan's Nikkei 225 was up 3.61%. Hong Kong's Hang Seng rose 3.62%, and UK's FTSE 100 gained 3.11%. Even Germany's DAX climbed 1.7%, while India's Nifty 50 moved slightly higher by 0.33%. Overall, it was an excellent week for Asian equities, showing risk appetite is improving, and that brings us to our market of the week. Market of the week. The Hang Seng Index jumped 3.62%, its best weekly performance in many months. We will analyze its charts later in this video to see whether this move is the start of a trend reversal or just another short-term bounce. But before we move to the charts, let's quickly check how other asset classes behaved. Precious metals. In precious metals, both gold and silver fell sharply this week. Gold was down around 3.3% and silver dropped by around 6%. Why? Because inflation data came in cooler than expected. Investors moved away from safe haven assets and equity markets attracted fresh buying interest. Crypto this week. In the crypto market, the trend was mixed. Bitcoin gained 2.74%, while Ethereum slipped about 1%. This shows that the risk appetite has returned, but traders are still selective and cautious. Market sentiment and volatility. Now let's understand the sentiment dashboard that tells us how investors feel. The fear and greed index is at 33, which means we are still in the fear zone, though slightly better than the last week, but is still in the fear zone. Market momentum shows the S&P 500 is trading above its 125-day moving average, a sign of strength and greed. The put-call ratio stands at 0.67, suggesting a neutral to slightly fearful sentiment, not extreme in either direction, and the VIX index fell over 21%, closing around at 16.36, which is near its lower band. This decline in volatility often helps markets stabilize and move up. Macro highlights. The latest CPI data came as good news. Inflation in the US was just 3% in September, lower than expected. Core CPI also softened, indicating price pressures are cooling off Meanwhile, the 10-year treasury yield hovered around 4%. That means bond markets did not panic after CPI data. Overall, macro environment is turning slightly favorable for equities as long as the inflation continues to stay under control. Transition to the charts. Let us now move to charts for technical analysis, where we will understand the price action and key support and resistance zones for S&P 500, Nasdaq 100 and Hang Seng Index. This is the weekly price chart of S&P 500 index. The index finally closed this week at 6,791.69 and thus it closed higher by 1.92%. Look at the price action. Earlier this was a major drop over here and then there was a formation of a cup and handle continuation chart pattern with a breakout over here. So the prior trend was bullish. So this becomes the continuation chart pattern. So there are one ways to calculate the upside move by using the Fibonacci expansion tool. Let us do that first by using this cup and handle pattern. The next possible level of 61.8% expansion comes at around 7,050, which has a potential to move to that level. However, nothing is guaranteed in the stock market. Another potential calculation could be, here you can see in this week, there is a breakout of flag pattern. So bullish flag pattern exists over here. In prior week, there was an inside bar that indicated the loss of downside momentum. So if I project by using the flag pattern and project, the next level comes at 6,863 and then potentially to 100% expansion of 7,062. Now let us move to the daily price chart. What we can see over here is that during the last trading session of this week, there was a gap up opening and this was the resistance. So this can be considered as breakaway gap. If I draw a rising trend line, so look at carefully, I am drawing a rising trend line. This trend line becomes an important dynamic support. Price has taken support here, taken support here, taken support here, once again bouncing from this important support area. So look at this price action. This is nothing but yet another continuation chart pattern. So if we project the level using this cup and handle pattern, what level comes? 61.8% level comes at 6,879 and then next 100% expansion comes at around 6,957 and this trend line will act as a dynamic support. Where are the support area? So this gap will itself will act as a support. So the first level of support exists at 6,749 and here if you see, this was the area of resistance where the price pierced through EMA 21. So 6,678 becomes another level of support where there is a confluence of EMA 21 as well. So this becomes the important demand area where there is a confluence of this rising trend line acting as a dynamic support. Can we draw another trend line to mark the dynamic support zone? So I am marking another trend line. Price has taken support here, taken support here, taken support here. So it has a 3 touch points. So it becomes the established trend line. So we can further define the zone between these two trend lines will act as a dynamic support. Now this is the weekly price chart of Nasdaq 100, which closed this week at 25,358.16 and thus it was higher by 2.18%. Now look at this, prior trend was bullish and so this was a deeper correction and then there was a breakout of a cup and handle kind of pattern. So if we use Fibonacci expansion tool and project the level from the point of breakout, then the next level potential level comes at around 26,167 and 100% expansion comes at 29,050. Now let us go to the daily price chart. Here too we can see the similar price action what we have seen in S&P 500. There was a gap up opening and this particular resistance was taken out with a breakaway gap. But there is a lacking momentum. Very small body kind of candlestick pattern has been formed. But considering this pattern, we can project the upside level by using the Fibonacci expansion tool. So according to this expansion level, the next level comes of 61.8% at 25,680 and 100% expansion comes at around 26,000. So these are the potential level. Where are the support zone? One is the immediate support will be there because there is an existence of a gap at 25,126, and another level is where the price face some kind of resistance over here and a confluence of EMA 21 along with volume weighted moving average 21 period at 24,800. So 24,800 to 25,126 becomes the immediate demand area in Nasdaq 100. Here too we can draw a trend line. I am drawing it, watch it carefully. This is an important trend line. Price has taken support here, once again taken support here. Here is an exception, gap down opening. But after the gap down opening, there was a recovery in the price and ultimately price entered above the resistance area, that is the trend line. So this becomes the dynamic support area, and this trend line is also falling in this particular zone. The added confluence of EMA 21. This is the price chart of Hang Seng index in weekly time frame, which is our market of this week. This index closed at 26,160, a jump of 3.62%. You can see the price action. Massive downtrending move, double bottom formation. Apex of the double bottom was here with a multiple resistance area. Price has taken out over here. So if we calculate the levels on upside by using the Fibonacci expansion tool, 61.8% essential level comes at around 29,389. That could be the potential upside move. Here look at the price action. There was a gap down opening in the prior week, but price respected EMA 21, and this week there was a formation of a one white soldier candlestick pattern, which is a pretty strong price action on the chart of Hang Seng index. Now this is the daily price chart. If you look here at the price action, price has been taking support at EMA 55. It has done it multiple times, but here it broke down EMA 55, but again reclaimed it and now trading above EMA 55 and EMA 21, which is very significant. But I foresee some kind of resistance in a zone of 26,550 to 26,900, and I explain you why I feel so. If I do the retracement of the corrective wave, this is the retracement. So you can see 26,550 is the golden ratio, that is 61.8% retracement level with respect to the falling wave, and 78.6% comes at 26,900. So this zone is likely to act as a immediate supply area. Once this supply area is taken out, then it may go and form the another high. Where is the demand area? This is a very important area where it registered. You can see the multiple resistance existed over here. There is a confluence of EMA 55 to 25,800, and yet another level is the swing low, which is 25,600. So this zone becomes the demand area in Hang Seng index. Conclusion. To sum up, this week belonged to the bulls, especially in Asia. Volatility has fallen, inflation data was cooler, and global sentiments improved. Still, investors should stay alert because the fear is not fully gone yet. If you want to learn how to read charts, understand price action, and analyze markets like this, watch Zero to Hero English playlist on my main channel, D K Sinha. Keep learning from Zero to Hero playlist to stay ahead. Remember, knowledge precedes wealth. Learning never stops with D K Sinha.